U.S. market stocks there pared their gains in the final hour of trading, but still kicked off the first day of May on a positive note. The Dow hit its best closing high since December 2007, fueled by a better-than-expected manufacturing report as well. All 10 S&P 500 sector indices gained as energy and financials led the rally.
Look at Asian markets, and it's a sea of green for Asia this morning. Japan is up by about 0.5%. Hong Kong is up by about 1%. China is at 2417. That's the Shanghai Composite for you of 21 points. Let's also check in on global volatility and other safe havens. Global volatility has subsided. In the month of April, global volatility had shot up by about 30%. But if you check on global volatility, gold prices, silver prices, broadly, safe havens are declining. Risk-on trade has started. Crude prices have stabilized, which to my mind is some kind of an indicator that money managers once again want to associate with risky assets. John Dunham, managing partner with the John Dunham Associates, joins us live from New York. John, morning. Always good to have you back on ET Now. John, characterize the U.S. market environment for us. U.S. markets are at a 4-year high. Nasdaq is now firmly fixed above 3,000. S&P is at 1,400 and Dow above 13,000.
Yeah, the U.S. market has been sort of steadily growing since it reached its bottom in 2009. A lot of that's reflecting the sort of inflation pressures from all of the currency that the Fed's been producing, but also the earnings have been really, really good. Profits in the United States have been outstanding over the last year, and I think a lot of that's what's driving the market.
John, hi, morning. What about global flows? What are you monitoring on that front when it comes to emerging markets versus the developed pack?
Yeah, the emerging markets are always going to be the place where there's more growth potential. You're not going to see huge growth in places like Japan just because the potential just isn't there. We've been looking at South America a lot. Brazil is one of the most interesting countries, I think, right now. Chile. The problem with South America is they also have Argentina, so you can't play the whole market. But Brazil looks really good.
So, John, what exactly are you advising your clients? Are you advising your clients that at a time when U.S. growth has shown a marked improvement, China is threatening to slow down, the problems in Europe are far from over, is it time to revisit dollar-denominated assets?
Yeah, that's a really good question. I've been very bearish on the dollar. I've been predicting that we're going to have an inflationary spurt for some time now, and what's been holding down headline inflation has been really, really weak housing costs in the United States. And there's going to be a day that turns, and it's really hard to predict exactly what day that is. But when that happens, you're going to start seeing pretty high inflation in the U.S., which is going to put a lot of pressure on dollar-denominated assets.